the market rally up in recent months. We were expecting the market to trade up in these levels. And then I gave you an outline for a bearish scenario looking for a quarterly shift. That means every 3 to 4 months, there's going to be a shift in market structure where the market can move sustained moves for 2 to 3 months, but as long as 4 months, because there's a little bit of an overlap where it's not running on a perfect 3 month calendar. Just because we say quarterly, that is not broken up equally into every 3 months. It can go a little bit past 3 months, and it could be as short as a price run of 2 months. All I'm stating is when I'm looking at higher time frame weekly and daily charts, I'm looking at how we could, for the next series of up to 2 to 4 months, where could it be reaching for? And I have these levels in mind, and I have them written on my pad. Okay, so my little notepad has higher time frame monthly, weekly, 4-hour levels. And they are very significant draws on liquidity for me and my trades. So if I think that there's going to be a draw to a very low level, like for instance, say 4,200, not that 4,200 is one, but for the sake of discussion here, say 4,200 is a level that I felt is something of importance, and that we could reach down here on a longer term basis. Any trades that I would be taking that's short, and if we get within, I don't know, 20 to 30 handles, I would likely be at my maximum risk, which is 5%. If I'm taking trades that would be moving away from my monthly, the weekly, daily, and or 4-hour levels, I'm not going to trade with 5%. I'm going to trade with like 1.5% maximum leverage. So the benefit of having all these higher time frame levels is to know when you're going to push the envelope of your risk. If it's more likely to pan out and go into these higher time frame levels, then I'm confident that my intraday trade executions are very, very tight. They're very specific. They're very extremely precise. I know what I'm looking for. I know when they're going to likely form. And if I can frame them on the basis of moving in the direction and it starts getting real close to these higher time frame levels, then I'm going to go with my maximum risk, which is 5%. Okay, that's how I ran up those MT4 accounts. Okay, when you saw me run those things up, I was doing every single time I took an entry, I was using 5%. Every new partial or every new pyramid entry, in and of itself, that new entry was 5% risk. So some of those trades would have as much as a 20% impact on that account. But when you're running it and you're getting hundreds of pips, it parlays it up fast. It's math. That's all it is. It's not a rented MT4 server. It's not Photoshop. Sorry. Anyway,